Good morning, welcome to IG's early morning call. It's Friday, 21st of July. Let's take a look at the headlines as we wait the start of today's European session. We're holding on to gains that we saw yesterday across the European markets, but overnight we've seen tech stocks take a little bit of a tumble. We saw some relatively poor numbers coming out from Tesla and Netflix, or rather the numbers were okay, it's just the outlook was the problem. And we saw relatively hefty declines of these two big tech stocks in yesterday's session, pulling down the Nasdaq. And here in the UK, we've just seen some better than expected retail sales, but consumer confidence. It's all about the fact that people are now understanding that they don't have the money to buy the things they used to buy because of rising inflation. It's a bite for reality. And oil prices looking good for a fourth week in a row. Take a look at what's happening in volatility. As I said this week, it's bumping along the bottom. We have seen what looks like it's going to be a week of positivity, but it is fractional. It is marginal. And when you see an uplift in the volatility, it means there's an opportunity here, a better opportunity to get a bite at these markets. London's FTSE 100 continues to rise, and in fact, at these levels, at 76.53, we are looking for small gains at the start of today's session at the top of the hour. And you can see in yesterday's trade, we peaked above recent gains. And in fact, we ended up at levels not seen since the 24th of May in yesterday's session. These are 24-hour markets, of course. So it's building in the market overnight, which we didn't see in the cash session yesterday. But significantly yesterday, we saw a close not just beyond the 200-day moving average, but also the 100-period moving average as well. And that gives me hope that there's potential further upside to go. And of course, London's FTSE has been one of the underperformers across the European markets. And the markets, as you can see here, in the context of where we've been, we are not actually too far away from where we were in February 2022 when you take out the fall and the rise. So that's where the markets are. They really haven't made much progress over the last 18 months or so. The German DAX, though, very different. And okay, well, look, we're levels here we haven't seen possibly January 2022, but I think on the whole, I'm feeling more confident about potential upside for the German markets. We are looking for a gain, or we've seen a green candle here again today. In fact, I think we're pretty much where we were as at the close last night on the DAX. So not much move at the start of today's session for either the DAX or the French markets. Although that being said, we're having another tilt at getting past this falling line of resistance on the French CAC 40 at 73.94. I can't see many sellers at this market in the session at the moment. Broadly speaking, we're holding on to the market gains for the week for the European equity session. Let's take a look at what's been happening for the Asia-Pacific markets. Nikkei on the way down. Hang Seng stock index building on yesterday's gains. It was the outstanding market yesterday with gains where we saw losses across the board on the other markets. Nikkei 225, S&P ASX 200, both on the way down. Wall Street closed yesterday. This is really all about tech stocks in yesterday's session, as you can see represented there by the declines we saw on the Nasdaq, down over 2%, S&P 500 down 2/3 of 1%, and it was tech stocks on the S&P, the broader market index, that really felt the heat. Yesterday, we saw money going into these old stocks, and in fact, old tech as well, because we saw, I think it was a 3% gain for IBM. IBM's a Dow component. Dow Industrials up 0.5% on the session in yesterday's trade. I want to show you these two stocks of interest that we saw yesterday. As at the close yesterday, we were pretty much at the bottom of the candle for the stock of Tesla. As we were reporting, the numbers themselves actually weren't that bad. And in fact, we saw a jump taking us up to 143.2% up on the year to date. And then came the news late on Thursday night, not on the earnings themselves, which weren't too bad. It was what Elon Musk had to say to the market, and yesterday's cash session saw this stock close down, or the extended trade last night closed down at $260.59. And it wasn't just Tesla either. As I said, it was Netflix as well, another stock that came to the market yesterday after having lost ground because of concerns about the outlook and the fact that the people that are buying new subscriptions are those that come from relatively cheaper countries around the world. And you can see yesterday in the extended trade, we built on that down at 434.95, indicating where some of the money was going. I did mention just before we get on to the main US markets that I did mention that all sessions on the IG platform, it was a relatively good day for IBM. And in fact, intraday, we peaked above the high that we had. What was that? That was the high we had there back on the 16th of June. And at one point in yesterday's session, we were trading at levels not seen since the 25th of January this year. So very close to a new all-time high for the year for IBM. This was as a result of its movements on from the earnings out late on the session on Thursday. So you can see there was some positivity, but it was old tech and also some of the other major old school companies, the industrial companies and so forth, transportation and defence stocks as well. Defence as in defensive, like drug makers and so forth. This is the NASDAQ. Dropping yesterday. But in fact, look at this. Look, this is the message I want to give. And I'll be talking about this on Beat the Street at 1:30 today when we do a look ahead to the US Open. My point is here is that we've got this market on the way down. But it is far from over. This rally is far from over. Since the low point we had back on the 13th of October, this market is up more than half. 52.71%. So it is just a little bit of a small retracement. We haven't even got below this line of support at 15,285. So despite the fact we saw losses yesterday, don't get too disheartened if you're still long on this market. This is the trend to stick with. And you just want to make sure your stop loss is in the right place so you don't get stopped out. Yesterday, the drop we saw in the market pulled the MACD down. But as I said, this is possibly just a little bit of a retracement in what is otherwise a market where we could well see some further rises. Don't forget, we've still got tech stock earnings coming through from the likes of Apple, from Microsoft, two of the other really big stocks that have done much of this heavy lifting on the upside. That's to come in the week ahead or so. So we can see that we do have some progress. Let's take a look at what's happened to the Dow, because this is where the money was going. I was talking about this trade which we set up a short while ago, where we're talking about this band between 33,604 and this line of what had been resistance at 34,575. And then came this big candle close beyond that. And so you measured the height of this move that we had in the band, you projected that, and you came up with this high we had here, which was my price target on the 21st of April 2022. So we're talking about something like 15, 16-month highs. We're already at 23%, 23.5% up since the lows we had back in October last year. The Dow has underperformed the technology stocks, the technology indices, but nonetheless it's looking pretty at the moment. And we're very close to that price target at 35,493. Watch me talk about a little bit more about this at just before the start at 1:30 p.m. Today UK time on the IG platform. UK retail sales for the month of June are coming better than expected. This was breaking news a short while ago, up by 0.7% month on month, when the market expected a 0.2% rise. There were increases across all the main sectors: food, non-store retailing, all except automotive fuel, which is slightly lower. Food store sales volumes bouncing back with a 0.7% growth in June 2023, following a fall of 0.4% in May 2023. This could have something to do with the fact that people aren't buying other things, the discretionary items. They're going for things they have to buy to feed their children, to feed their family. Non-food store sales volumes rising by 1% in June 2023, following a fall of 0.5% in May. The automotive fuel store sales, interestingly, volumes falling by 0.3% in June, following a rise of 1.7% in the month of May. So that's retail sales. Early this morning, GfK consumer confidence showing that the British consumer turned more pessimistic last month, which seems to fly in the face to some degree of the retail sales numbers. The context of high inflation and rising interest rates, according to the market research firm GfK. Consumer confidence fell to a -30 this month from -24 in June, the first drop since January, biggest month-on-month fall since April last year. In a GfK statement, it says, Joe Staten said, reality has started to bite, and as people continue to struggle to make ends meet, consumers are pulling back in spending on discretionary items. Let's take a look at what's happened with sterling. We have actually got a little bit of a lift for sterling in the session in today's trade. I just want to take you through a 5-minute candle chart here showing you what's been happening. The midnight break that we saw when we saw that data release was back here for GfK. But this is the retail sales data, which has seen a lift for sterling. I don't think it changes things in terms of interest rates this week. We've got a rowing back of interest rate expectations. But I think on the whole, the picture still remains a little bit clouded. We've got probably 2 interest rate rises to come. And this is really what sterling is pricing in. I think with the recent rises we've seen, the most recent fall this week, I think, has been all about what's happening with the US dollar. Let me just quickly work out where we're going to go from here. I think this line of Fibonacci support, which we're pretty much the highs we saw back on the 16th of June. I think that's going to be the price target if you are short on this still, despite the fact we've got a little bit of a rise today. This is the area of support down here at 128.10. 128.89 is over trading at the moment. And I've yet to see whether or not this recent downtrend that we've got here for sterling will be arrested or will be stopped with this small rise we've got today. But I think broadly speaking, retail sales looking good, consumer confidence not so rosy. Now in Japan, the inflation picture remaining above the Bank of Japan's 2% target for the 15th straight month in the month of June. Let's take a look at the figures. Headline CPI rising 3.3% in June year on year after 3.5% the previous month. Core CPI, which excludes fresh food costs, rising 3.3% in June from this time last year, accelerating from a 3.2% rise in May. But economists saying don't expect the Bank of Japan to start raising interest rates anytime in the near future. Excluding both fresh food and fuel costs, the index rising 4.2% in June from this time last year. Now that's down from 4.3% in May. This version of the index favoured by the Bank of Japan slowed for the first time since January 2022. And I think mindful of what's happening with the Japanese yen. You can see if you look at this chart here, the yen is falling again today. This is the dollar rising against that weaker Japanese yen. It's becoming clear to some economists that with services price growth also slowing last month, policymakers will feel that wage pressures have yet to build up enough to warrant an imminent tweak to the ultra-loose monetary stance. So the Bank of Japan not expected to move anytime soon. And I think the underlying information and data coming through from today's CPI numbers would seem to underline that stance for the Bank of Japan to keep interest rates ultra low. Now, let's take a look at some of the corporates. Nothing out here in the UK today. There has been a trading statement from Glencore, but I can't really see anything to bite on that. But what I do want to do is I want to wind the clock forward to take a look at what we got from American Express a little bit later on this morning. All sessions on the IT platform scheduled to report earnings before the bell today. Let's take a look at the figures. The street expecting earnings of $2.81 per share and revenues of $15.41 billion. This isn't all sessions stock. It'll open at 9 o'clock this morning. Quick look at what we've got in terms of share price. Yesterday, rising there to levels not seen pretty much since the 8th of March this year. And we got this rising line of support underscoring where we should be. If you are long on this going into the numbers today, your stop goes under the underside of this rising line of support at around about the $172 level. We're currently trading 178.62. And if you see a good set of figures coming out today, we expect this market to continue to see this rising picture here. Again, this is something else we'll be talking about in the Beat the Street at 1:30 on the IG platform. Another company, not all sessions, but nonetheless worth a mention, reporting before the bell today on Wall Street is the oil field services company Schlumberger. Let's take a look at those figures. The oil services group expected to post earnings of 71 cents a share on revenues of 8.2 billion. Why is it worth a mention? Well, look at the chart. This is interesting. Over the past 12 months, the stock has risen by a staggering 77%, way more than its rivals. Halliburton up 32% over the period, Baker Hughes up 29%. Since its lows of March 2020, the stock is up 390%. So you can see the direction of travel for Schlumberger. And if you go back, let me take a look at the entire picture for this company. You can see we're looking like we could well break these levels here, where we saw the highs back in January this year. And if we get past that, we're then at levels not seen since October 2018. So I'll be following that as well. And what's the likely outcome of that and how it could impact on the start of today's session. Schlumberger is in the oil sector. Let me just quickly show you as well what's happening with oil. This is Brent, up for a second day in a row. Oil prices poised to record a fourth straight week of gains. There are two things going on here. First of all is concerns about potential drying up of some demand because China hasn't developed the way many people thought it might do. But at the same time, you've got this idea that oil companies just aren't investing enough in new oil fields. So future oil is unlikely to come onto the market the way it had done in the past. And of course, there's a lot of pressure from environmental groups as well for these companies to start to invest more in renewables. And this means that the oil price potentially could well see some further upside if we don't get the oil in the market, because let's face it, we're not all going to stop driving petrol cars just because Some people in the market say it's the right thing to do. This will inevitably still continue. And I think the more pressure people find on their own personal balance sheets, the more likely it is they're going to go for the easy option, keep the car and keep driving with the old style fuel. And that's the situation I think that's going to remain. Last week, quick look at what happened with Baker Hughes last week. Last week, Baker Hughes' total rig count fell by 5 to 675 rigs. Oil down 3, the lowest level since April 2022. Let me just quickly wind you back into the charts again. Just take a look at what's happening with spot gold. I was talking about this channel we got for gold earlier this week, and I was saying that if you're long on this, I have to say that the trade hasn't worked out at the moment, but my stop loss is underneath the underside of this rising line of support, and that remains. And I think I was talking about it when it must have been something like around about Tuesday, maybe. I was talking about then the stop loss would have been around about the 1900 level, and the idea is that this line of support will hold, and then it'll bounce back. The next upside target is 2000. If you are long on this, your stop goes in this area down here to around about the 1950 level. 1971 is where we're trading, and 2000 is where we are headed on this idea that you've got this channel playing out. We'll have to see how things develop. And again, I'll pick this up in Beat the Street at 1:30 today. That's it for this early morning call. Hope to set you up for the start of today's European session. Looking as though we could well hold on to yesterday's gains. Nothing particularly to watch out for at the start of today's trade, but I would highlight the Trader chart in the markets with Axel Rudolph at 10:30 on the IG platform this morning.